What's going on, everyone? Welcome back to J Trading. Today I'm going to show you how you can verify the trend reversal just by using divergence. It is the most powerful strategy that you can use to verify a trend which is reversed or it has already changed its direction. So most of the time we have chart patterns or candlestick patterns that we use to take a trade, or maybe a breakout strategy, any type of strategy you use to take an entry that should be supported by some indicators like this. So divergence can be used with RSI, it can be used with MACD, and it can be used with any other type of indicators like maybe moving averages also. But today I am going to show you how you can spot divergence just by using RSI or relative strength index. So the first thing you need to do is open up your chart. I will show you on Crash 1000 only. So after you load your chart up, you have to add indicator. So I'm going to add RSI indicator. RSI means relative strength index. It shows the strength of the market relatively in a period of days that you choose. So when you add RSI, you can go to the setting and you can change the number of days that you want. So most of the time I use 14, you can use 13. Average, you need to use RSI between 2 weeks or minimum maybe 8-9 days. So you can use 9, but most of the time it's better to use 14. So put 14 over there. We have RSI and we have the chart loaded up over here if you see. So the first thing you need to do is always have your own strategy. So let's say you have your own strategy, you're about to take a trade, but you want to make sure that it's a legit breakout or a legit trend reversal. That's what we are going to do today. We want to verify trend reversals if it's true or false. So the first thing we have here, a line I drew already. That this line, it's a trend line, there is nothing new. You just need to connect all the reversal points like this. Here we have a reversal, here we have a reversal and reversal. So connect all those 3 points together. So when you connect them, it shows that the trend is upward, right? The line is slant, or it's inclined on the upward direction. Then you go straight down to the RSI where those points are connected together. So here we have the first point which touched the trend line. So we go straight down on the RSI and we spot this line. So put some kind of note over there. Then the next point is this one. Go straight down to the RSI here. And the third one is this one, which is at this level on RSI. So RSI, we have two levels. The minimum point is 0 and the maximum level on RSI is 100. But you can put these lines over 30 and 70 because the average lowest point in RSI is 30 most of the time. Market bounces from the 30 level and market gets rejected from the 70 level. So you can put 30 and 70. Now we have these points. We can connect these points together, but the point at the middle, it's below the average or the 70, so we can ignore that. Then put a trend line over there, connect those points like this. So when you connect them, the line on the chart, it's inclined, but the line on the RSI, it's declined. That means there is divergence. Divergence means, in short, it is a variation in angle. On the chart, the line is upward like this, going up. On the chart, it is going up like this, but on the RSI, it is going downward. So that means there is divergence. They are not headed in the same direction. The secret behind this is, on the chart, even though the price is trending upward, on the RSI, the strength is being weak. The buyers who has been in the market are losing their strength. This shows that the trend is about to reverse. So the trend is about to change its direction. That means if you have another strategies like a pattern or any type of strategy which is showing that the market is about to reverse, then you can add up this divergence indicator as another signal for you to take a sell signal here. Let's say you drew a pattern here maybe a triangle pattern like this, and you got a breakout and a retest here. It retested the triangle. You want to take a sell position here, but you're not sure. What you need to do is check for the RSI if it is in a divergence with the chart. Now let's move into the other part, and let me show you this clearly in another example. It is super easy. You just need to spot all these reversal points and compare them with the RSI. If the RSI and the chart are trending in the opposite direction, that means there is something behind the price action. It tells you that something is about to happen. So here we have a line which connects almost 2 points. Here we have 1 point, another point. So this point exactly, if you go down on the corresponding RSI level we have, since it's on the lower level of the chart, you need to see the lower level on the RSI or near 30. So the first point, it has corresponding level here on the RSI, and the second point, it has corresponding level here. So we can connect them together like this. So you see how they are divergent. On the chart, it is headed downward. On the chart, the line is declining, or it is headed downward like this. But on the RSI, it is headed upward. So it is inclined. So decline and incline means there is angle difference between them, which indicates that there is divergence. So what you need to do is, you don't take just divergence as a signal. You have another signals, maybe like a breakout. We have a pattern here, a triangle pattern. Market is about to break out of this trend line, and we want to take a buy position. Or maybe you have a support here. Any type of strategy that you are using, any type of price action, any type of signal that you are using is indicating that the market is about to go up and you need extra information. So you go to RSI, add RSI, draw the line like this. If it's declined on the chart and inclined on the RSI, or in short, if there is divergence between the chart and the RSI, then the trend is about to reverse legit. Now let's go to the third part, and let me show you this in another example. Here we have another level. So connect these points. The first point is here, the second point is here. Connect them together like this by a line. Corresponding points on the RSI will be, the first one is here, and for the second one, for this part, you go straight down on the RSI and this one. So these two peaks will be connected together. If you connect them together like this, so if you connect those RSI levels together, you get this kind of line which is at the same level. Those RSI peaks are at the same level, which indicates that on the chart it's inclined, it is going upward, but on the RSI they are at the same level. This means here on the chart the price is going up. It seems like there are a lot of buyers, but when you go to the strength index, it shows that that the buyers are losing strength. You see, here we had the buyers at this strength level, but again we have strength level at the same level, but price action is above the previous one. This indicates that there is divergence. The buyers are losing hope, the buyers are in despair. That means there is a trend reversal. So you combine this strategy with another strategy like this, maybe a breakout, it breaks out of this trend line, you take a sell position at this level because you got a confirmation from divergence. Now let's go to the other part, and let me show you. So here we have another example. Still we are on crash 1000, by the way. On the chart we have 2 points which are exactly at the same level. Here the price action is telling you that a double top is being formed. So double top is formed, and we have a line which connects these points together. The price action is at the same level. But when you go to the RSI, for this first point, the corresponding point is this level. I hope you see my cursor. Here, this point corresponds to this one, and for this one, the corresponding point is here on the RSI. So you connect the RSI lines together like this, you get an inclined line. On the price action, we have something like horizontal line, but on the RSI, something which is inclined or going upward. This indicates that there is divergence. On the chart, the price is at the same level, but the strength is different on those 2 points. The first point and the second point. The price actually tells that the price is the same at those 2 points, but on RSI, here it is weaker, here it's strongest. That means something behind is being formed. The trend is about to reverse. So what you do is you combine this with another strategy. Since this is double top, you can confirm that this is a trend reversal. Here at this level exactly, it will be a trend reversal. Or since this is 4-hour time frame, you can go to lower hour time frame and you can draw maybe a trend line like this. Or maybe you can you may identify some type of pattern at this level, maybe a triangle or any other type of pattern. Then you combine that with a divergence, you get a good entry for yourself. So this is it, I guess. I think you got the concept behind this. There is nothing new here. You just need to combine your strategy, any type of strategy that you are following, with the divergence. You can use divergence with RSI, with MACD, with moving average, with momentum indicators, with volume. You can combine with all these indicators. In the coming up videos, I am going to show you how to combine divergence with maybe MACD or volume, how you can identify these. And we are going to see forex charts, cryptocurrency charts, and all these charts in the coming up videos. So if you're new to the channel, please consider subscribing. If you like the video, put thumbs up. See you in the next video. Adios.